If you're a homeowner looking to save on taxes, you've probably heard that there are some major loopholes out there. But what you might not know is how to take advantage of these strategies in a way that truly maximizes your savings. Today, I'm going to break down the best tax loopholes for homeowners and show you how you can use them to your advantage. And trust me, these tips can help you save a lot more than you might think. Stick around, because I'm going to share some insider knowledge that could change the way you think about tax season. Before we dive in though, if you're serious about protecting your wealth and securing your retirement, click the first link in the description to get your hands on the free Gold IRA guide that thousands of Americans are using to safeguard their savings. This guide is a must-read if you're over 50 and looking to make your wealth last for generations. Now let's talk about tax loopholes. For homeowners, one of the biggest advantages comes from the mortgage interest deduction. If you have a mortgage on your home, you can deduct the interest you pay on your loan from your taxable income. This is a huge deal because the larger your mortgage, the bigger the deduction. This can reduce your taxable income significantly, which means you pay less in taxes. Just keep in mind, this deduction is capped for loans over a certain amount, but it still can make a significant difference. Another great way homeowners can save on taxes is through property tax deductions. In many states, property taxes are deductible from your federal income tax. This means if you've paid a substantial amount in property taxes, you can reduce your taxable income by that amount. It's important to keep records of your property taxes each year and make sure you're claiming every bit of this deduction. And remember, while property taxes are deductible, the total amount is subject to a cap, so be aware of that limit. But here's a tax loophole that many homeowners overlook: the capital gains tax exclusion. If you sell your home and it's been your primary residence for at least 2 of the last 5 years, you could qualify to exclude up to $250,000 in gains if you're single, or $500,000 if you're married, from your taxable income. This can save you a ton in taxes when you sell your home, especially if you've built up significant equity. Make sure to keep track of how long you've lived in the home, because that 2-year rule is crucial. Now you might be thinking, all these deductions are great, but there's one thing that stands out even more for wealthy retirees like yourself. That's right, Gold IRAs. While tax loopholes for homeowners are useful, protecting your wealth through a Gold IRA is an even more powerful strategy. Gold IRAs offer tax benefits while helping to protect your savings from inflation and economic downturns. If you're nearing retirement or already in retirement with $100K or more in an IRA or 401K, or even if you have 5 plus in savings, you need to consider this option. If you want to learn more about why so many Americans are turning to Gold IRAs to safeguard their wealth, don't miss out on the free Gold IRA guide in the description below. It's an essential resource for anyone serious about long-term financial security. Let's continue with some more homeowner tax strategies. If you've made home improvements or added energy-efficient systems, you might qualify for tax credits. For instance, if you install solar panels, there's a federal tax credit that can cover a significant portion of the cost. These credits directly reduce the amount of tax you owe, rather than just lowering your taxable income, which can be even more valuable than a deduction. Lastly, if you're using part of your home for a business, you could qualify for the home office deduction. This is available if you use a portion of your home regularly and exclusively for business purposes. The IRS has specific guidelines for this, but it can save you on utilities, mortgage interest, and property taxes as well. Just make sure you're following the rules and using your home space correctly to avoid any issues down the line. To wrap things up, the tax loopholes for homeowners can certainly help you save money, but don't forget that diversifying your wealth with options like Gold IRAs can give you an added layer of protection against inflation and market volatility. If you have over $100K in your IRA or 401K, or even if you've got 5 plus in savings, click the first link in the description below for your free Gold IRA guide. This is a critical move if you're serious about protecting your wealth for the future. Thanks for watching, and make sure to subscribe for more tips that can help you keep more of your hard-earned money.